In this video, we're going to talk about volume analysis for beginners. So this is going to be very much an introduction to volume when it comes to technical analysis. So my name is Tyler Stokes from StokesTrades.com. I'm on a journey to become a full-time day trader, and we're at the stage now where we're studying technical analysis and we're studying volume. So if you'd like to download my 6-month blueprint, which outlines everything that I'm doing in the first 6 months of this journey, you can find a link to that below this video. And what's great about that resource is it will come with all the resources that I'm personally using to study technical analysis and study everything that I need to study in order to become a full-time day trader. So this video, this content here is very much an introduction to volume. Volume is a big sort of concept when it comes to trading. So certainly this is not the only resource that I would recommend you check out. You'll certainly want to check out other things. There's textbooks on volume. So there's a lot of information to cover. Here we just want an introduction to what volume is. And what we're going to do is talk about a popular indicator for a volume. So when it comes to day trading, I think even as beginners, we understand that price movements is very critical to making trading decisions. So that's that whole idea that, technical analysis is really about price action. So you're watching like a candlestick chart and you're watching what the price is doing. And then you can use various technical indicators to help you forecast where the price is going to go so you can make your trades. Well, what if I told you that there's another crucial factor that you need to consider to make even better trading decision. So imagine having an additional tool that can help you confirm trends, identify potential reversals, and gauge the strength of price movements. Well, that is what volume is. So watching the price is very important, but watching volume is as well. And if you're a beginner, like I was a beginner starting this journey, I never really thought about volume, but once you sort of review, how it can affect the prices of stocks and how they can change, you can understand how volume is very, very important. So that's what we're going to do here in this video. Just talk about it in a sort of beginner friendly way. And we're going to review one technical indicator that's very popular that has to do with volume, and that's called the VWAP. So that stands for volume weighted average price. So we're going to run through the formula and we're going to understand what the formula is. And then we'll look at TradingView, and we'll actually look at the technical indicator on an actual chart as well. So in terms of volume, like what is it? What is it? Is it actually, what's the pure definition? Well, volume refers to the number of shares traded in a market during a given period. And we're talking stocks here, but it would apply to other markets as well. So the Forex market, you would be counting the number of currency pairs that are traded in a given time period. So it is a fundamental metric in trading, and it indicates the activity level of a stock. So high volume means there's more active traders who are trading that particular stock on that particular day. And low volume means that there's just less trades happening for that particular day. So why, is volume important? Well, it's very important. It's crucial because it shows the level of interest in a stock. So higher volume means higher liquidity, meaning, there's more trades happening. You can get your trades in and out. You can get your money in and out. Or if there's a price that's listed, you can sort of buy or sell at that specific price. And that's just, more stable price movements. And then on the other hand, with low volume, it can lead to, more volatility and sometimes some price slippage. So that refers to, if you put an order in for a buy order at 100 and it gets executed at 101, that is a bit of slippage. So if there's less volume, less liquidity, then you can't always get the prices that you want. Now, there is, day trading strategies that are good for, higher volatility and low volume stocks. But, obviously there are strategies in place that are good for, high volume and high liquidity as well. Now, in terms of the relationship between volume and price, they are closely linked. So when a stock experiences high trading volume, it generally means that there's strong interest, which can drive up the price or drive down the price quite significantly. So low volume, on the other hand, that might suggest that the price movement sort of lacks any conviction and it may not be sustainable. So There's this belief in the technical analysis sort of world that volume actually precedes price changes. So what this means is that significant changes in volume can often be a leading indicator for future price movements. And any edge that you can get in trading is important, and that's why following volume and using volume indicators can help you make better trades. So for example, if there's a sudden spike in volume, that might indicate that a substantial price move is imminent, as increased trading activity can reflect heightened interest or heightened sentiment in the particular market that you're in. So in terms of the significance of high and low volume days, high volume days, these often coincide with the significant price moves in either directions, and can confirm the strength of a trend. So if there's a move in the stock price up or down with high volume, it can confirm that that is a strong trend it might pursue, and the probability of it continuing on is maybe relatively high. In terms of, and then on the low volume days, these can indicate maybe a lack of interest or a bit of uncertainty in the market. So weaker price movements, and low volume can suggest that the trend might not be strong, and maybe there is a reverse coming in the direction of the particular trend. So in terms of practical applications, again, we kind of talked about it just then, confirming trends. So volume can validate price trends. So a strong uptrend with increasing volume, so there's more trades happening as the price is rising, it's more likely to continue than the same situation with declining volume. So again, volume can confirm the strength of a price breakout from a resistance level as well. So, if price moves up and it hits a resistance level, there's a few factors that might relate to why it will break through. Maybe people shorted and that they need to cover, or if people sold early and now it's coming up to a resistance level and it meets that resistance, and people buy back in, or new buyers come in, and suddenly you get a lot of volume after resistance, and that could lead to a breakout. So volume certainly plays a role in reversals and breakouts and things of that nature. It could also help you, again, identify these reversals. So changes in volumes can signal potential reversals. So a downtrend, if the stock price is in a downtrend with decreasing volume, so there's less trades happening as the stock is going down, that might signal that a reverse is coming. If suddenly more volume comes in and the stock price spikes, then you could be moving into an uptrend from that particular downtrend. So again, volume is very important to monitor, specifically for confirming trends and for potentially highlighting that a reversal in the trend is happening. Now, in terms of one popular indicator that has to do with volume is called the VWAP. So that stands for volume weighted average price. And it helps traders sort of determine the average price a stock has traded at throughout the day based on volume and price. So we're going to talk more about the difference between this and a simple moving average. But here, if you want to just think about it to start with, it just takes in the volume when it's creating that average. So the formula is going to be the sum of the price times the volume over the sum of all of the volume in that particular time frame. So price is the price of the security at the time interval, and then volume is all the security traded that day. So we'll dive into this in more detail here, because I think it's important. When you look at the math, sometimes you might want to click away and not continue watching. But if you just get a fundamental understanding of the math behind some of these formulas, it's just going to help you realize what's happening. So sometimes you can just press a button on your trading software and you can get the chart, and you can understand that when the price is above the VWAP, then it's a bullish sign. It's below the VWAP, that it's a bearish sign, and so on. But I think it's important just to get a good understanding of what math goes into some of these formulas, and it's just going to help your understanding. So again, the VWAP, what it does, it represents the average price a security has traded at throughout the day based on volume and price. So the formula, basically, it multiplies the price by the volume for each trade during a trading session, and you add all these up, and then you divide by the total volume for that session. And what that gives you is the average price at which the security was traded, weighted by the volume of each trade. So here is a sort of example of how this would work. And if we kind of just break this example down into simple terms here, let's just pretend our time interval is just 3, whereas in real life, you would have all the trades that are traded in every given time frame throughout the whole day. But let's just pretend that for this time frame, there are just 3 trades that happen. So the first trade that happens, the price is $100, and there are 200 shares that are traded. The second interval, the price is at 102, and there were 150 shares that were traded. And then the third interval, the price, we will pretend it's at 101, and 250 shares were traded. So again, these time intervals will happen on every single trade that happens throughout that particular day. But for simplicity, we're just going to pretend that there's just 3 trades that are time frames that happen for this. So what you would do is you would do 100 times 200, you do 102 times 150, and then you do 101 times 250, and you get all those values and you'd add them up. So that's price times volume for each trade, add them all up, and then divide by the total volume. So 600 shares total were traded throughout those intervals. And then here you get a weighted, a volume weighted average price of $100.92. So that's the average based on the trades that were happening, where the volume of each trade at the specific prices is taken into effect. And that's what the VWAP gives you. So if we kind of looked at an exaggerated example of this, if we want to remember, $100.92, well, you can kind of see how volume affects this formula. If we did everything the same, but now instead we had 200 shares that were traded at the $100 price. If we did that math now, basically when we divided, our VWAP lowers down to $100.23. So the volume here on the trades that happened at a lower price clearly impacts the VWAP, and now we've got a lower average. You got $100.23 versus the almost $101.92. So here it clearly shows that more volume at this lower price is going to affect the VWAP, and that hopefully gives us a better understanding of what this VWAP is and what this technical tool is. So when you put it on your chart, you can kind of understand that it's a volume weighted average price that is being calculated. So hopefully that was useful. So in terms of what that VWAP represents, again, sort of reviewing this again here, what it gives us as traders is sort of an idea of the average price at which the stock has been trading throughout the day, and it considers the price and the volume. So it helps comparing the current price to the VWAP to determine the market's trend. So generally, above the VWAP, if the stock price is above this line when you put it on your chart, that indicates that there's a bullish trend that's happening in that moment of time. And then if the stock is below that VWAP, then that could indicate a bearish trend is happening during that moment in time. Now the VWAP, it's a cumulative indicator, meaning it's recalculated throughout the trading day, giving an updated value, as more data and more price volume sort of comes in. So this makes it sort of dynamic and highly responsive to the day's trading activity. And then, that makes it an important tool for people who are day trading and they're trading within the single day. Now, if we kind of go back and compare what we have in the VWAP versus just a simple moving average, which we talked about in some previous videos, you can see that there are clear differences and there are clear scenarios where one is not necessarily better than the other, but used to kind of help a trader understand different things. So again, as a good summary here, the VWAP takes into account both price and volume. So it multiplies the price of each trade by the volume of that trade. and then adds these all together and divides by the total volume for the day. So this makes this VWAP a more accurate reflection of the average price at which the stock has traded, weighted by the volume of each trade. Now, a simple moving average, it calculates the average of the stock's prices over a specific number of periods, giving equal weight to each price point, regardless of the volume traded. So it takes the closing price, if of each day. It doesn't take into account the amount of volume, and then it looks at that over a period of a 5-day, 10-day, 50-day moving average, or a 200-day moving average, and so on. So it doesn't take volume into account. So again, the VWAP, it resets at the beginning of each trading day, making it particularly useful for intraday trading. It provides traders a benchmark price for the current trading session. So it is more of a indicator that you would use on when you're looking at a daily sort of basis, and you might be looking at the candlestick charts that are 5 minutes or 15-minute candlestick charts. Whereas with a simple moving average, you calculate these based on has the average price been over the last 5 days, 20-day, 50-day, or 200-day, making it versatile for analyzing longer term trends and sort of smoothing out the price data over the weeks, days, or months. And now there is this thing called the anchored VWAP as well. We're not going to get into too much of it in this video, but you can basically get a VWAP that can be anchored to a specific time, and then you can calculate the VWAP from that particular moment. So rather than having it just used on an intraday basis and resetting every day, the anchored VWAP, it allows traders to select a specific starting point. So if a company had earnings report come out, or the start of a new year, you can anchor that VWAP to that specific date, and then you can look at the VWAP as it continues on from that particular moment in time. So it calculates the volume weighted average price from that point onward. So you can anchor it to a specific date. And again, so this makes the anchored VWAP useful for analyzing longer term trends and key price levels over days and weeks and months that takes volume into account, whereas a simple moving average just doesn't take the volume into account. So again, usage and application. The VWAP primarily used by intraday traders, so day traders, and institutional investors who want to sort of gauge the average price of a stock throughout the day, helping them determine the optimal entry and exit points. And it ensures that trades are executed at prices that reflects the day's average. So if a big institutional institutional firm wants to buy a whole bunch of shares for a client, they would look at the VWAP for that particular day, and perhaps if the price is above the VWAP, they might not want to make a big purchase of that particular shares. They might want to wait until the price has fallen below the VWAP before they enter a big, large trade. So that is just one way that an institution might use the VWAP. Whereas for a simple moving average, traders, we use that to identify the overall trend, support and resistance levels, and sort of to smooth out the price fluctuations. So it's good for spotting sort of long-term trends. If you look at what the average price has been over the last 50 days, and the price is currently above that, you can consider yourself in an uptrend. And then there's other strategies where, some of these average crossover, so that, if the 10-day moving average crosses over and rises above the 20-day moving average, then, that's an indication that the last 10 days, the price has been rising relative to the other 20. So you could be moving up into an uptrend. So there's various things to do in terms of strategy, but that's just a little bit of the differences between, just a simple moving average, which doesn't take volume into account, and then the weighting moving average. So in terms of, looking at this, why don't we jump over to TradingView really quickly, and we can just plot one of these on, the last day of the month in May with Apple stock. So let's jump over to TradingView, and we can kind of see this tool on our charts. Okay, so we've got TradingView opened up here. TradingView is a free software. There are paid plans as well, but everything I'm doing in this video here, you can do with a free account on TradingView. So below this video, there'll be a link to TradingView. All you need to go is just sign up for an account for free. If you don't sign up for an account, you're going to get an annoying pop-up that comes up a lot. So you just create a free account with your email, and then you can actually use this chart with some limitations with the free version. But you can come here and do exactly what I'm doing. So we've got Apple here, and we're looking at the 5-minute candlestick chart. So each one of these candlesticks represents 5 minutes. And we're going to go to technical indicators, and we'll type in VWAP, and we'll get it here. And on the chart right now, we're looking at the VWAP, and what we want to do is just come to the settings, and we just want to just include the VWAP and none of these other bands. And now we have the VWAP for this particular stock here. So we can see that this is, basically the start of this day here. If we want to just look at the last day in May, so May 31st, we're starting here, and then we can see Apple is trading right around $190 here, and we can see that the price of Apple here is down at 190, which is slightly below the VWAP for this particular time frame, and that's basically what this measures. So this blue line is the volume weighted average price, and then you can see here that for this particular time, Apple has been slightly below it, and then it rises back up. So day traders would use this particular indicator to make decisions on when to maybe enter or exit trades. And that's basically a very simple version of what the VWAP looks like on a specific chart. So this is a 5-minute candlestick chart for Apple, and that's one of the common time frames used for this particular one. It's also common to use the 15-minute chart. So if we kind of change that here, so some traders will use this particular chart as well. So we can see here we're sort of the last day here, and then this is going to give you an indication of where price is related to the average, to the VWAP for this particular stock. So that's TradingView, and again, you can access this and play around with this for free. You just need to sign up with your email. Okay, so just to wrap up this sort of introduction to volume, very beginner-friendly introduction here. There is a lot more to learn in terms of volume. There's textbooks written on it. There's more things to study, but hopefully, we got a understanding here that volume is important and it plays a role in the changing of stock prices. And as a day trader looking when to make trades and make entry and exit trades, watching your volume is going to be very important for the strategy that you eventually use in terms of your day trading strategy. So understanding volume and its indicators. Today we looked at the VWAP. That's just one indicator. There are several others. It's very, very important as a day trader. You're really going to want to get a handle on volume. And basically, volume, it provides insights into the level of interest and activity in a stock. And when you combine that with price action, it can help you sort of validate trends, potential reversals. And those are things that you're going to use to make trades with your trading strategy. And again, we looked at the VWAP. It's a powerful tool. It helps traders understand the average price a stock has been trading at throughout the day, weighted by volume. So, unlike just a simple moving average, which only considers the price over a specific period, the VWAP indicator incorporates price and volume, making it particularly useful for day trading. And again, VWAP resets at the beginning of each trading day, providing a dynamic and accurate reflection of the day's trading. And again, you can access the anchored VWAP indicator with your trading software tools, and that's going to allow you to put the VWAP on a specific date, anchor it to that date, and you can kind of see the volume weighted average price moving forward. So that's the indicator. And again, the bottom line here, volume and volume indicators, they're clearly something that everyone who's going to get into day trading will need to understand and master. And hopefully this introduction helped us sort of just understand the importance of volume and hopefully it's going to encourage you to learn more about this particular aspect of technical analysis. So thanks so much for watching. I hope that you found this useful. Subscribe to the channel. And again, if you're a beginner and you'd like to download my 6-month blueprint that outlines everything I'm doing in the first 6 months to become a full-time day trader, and it will have lists of all the resources that I'm personally using, you can find a link to that below, or you can go to stokestrades.com/blueprint. So thanks so much for watching, and we will see you in the next video.